Hey everyone, it's Tim here. It's 3 o'clock in the afternoon. I'm going to shoot this really short video on the short-term action here in corn and beans because I want to show you what these divergences look like, and just to carry on what Jeff talked about yesterday. So one of the things that we want to do is look for a divergence action in this big move down. Let me scroll this out here so you can see the daily chart so you can have your context. What I'm looking at is this action from the peak here on the 27th of July down to today's low. And what we want to know is this a wave 2 or not, right? So first thing you should notice is we held the 50% retracement level on beans. We stalled out right at the top of the daily cloud. Now the second thing that we want to look for is on the 240-minute chart, two things. Are we contained within parallel lines, and do we have any type of divergence action? Well, divergence action is a clear yes, because we have this low here and here with higher subsequent lows, and then the low from this morning is also met with a higher low from here. So you have this divergent action where the market is finding new lower prices but without additional selling. And that's not that uncommon coming ahead of a report, but it's still meaningful. Then another thing that we can look at is whether or not we are contained within parallel lines by snapping a trend channel to the high and low point, to the high and then the intermediate low point, and you can see that this move down is contained within parallel lines as well. So you've got a move contained within parallel lines, and you've got a divergence happening on the soybeans. If I take this down to a 60-minute chart, you can even see that divergence more plainly as we diverged all the way from the low that was set on the 31st clear through today. We continue to find divergent action. So as we challenge the top of this downtrend, this trend channel, we should be able to blow up higher here on beans. Now let's do the same exact analysis for the corn market and see what that looks like. Okay, so here's the corn market. Here's the move from. You got to choose which peak you want to go from, but we're going to go from this one because it's the most recent, and we want to see this action down here. And what we want to do is take a look exactly at what we're doing. So you can see we've found some support here at this natural chart resistance where we previously found support, and we do have a bullish engulfing day today, where today's real body engulfed the prior 2 full days, so that's a good sign. Now let's go down a time frame here and look at the same analysis as we had for corn as we had for beans. So are we contained within parallel lines from the peak? There's the intermediate high right here, and here is the intermediate low right there. Absolutely contained within parallel lines all the way down. Never did develop into what we would consider wave 3 price action. And then the overnight action here has chopped, and we've broken that downward channel. So corn had a nice day today, even though it's only up 3.5 cents. The actions kind of speaks for itself. Obviously we want to see it reclaim the $5 mark and work higher, but from a technical standpoint, this thing looks really pretty good. You can see the big divergence here from the low down. You can see the big divergence here on stochastics. If I drop to a tighter time frame, you can see those divergences even more plainly in the most recent retest of the low here. And then if we go to the daily chart, you can even see some divergent action happening on the daily chart as well. So you're diverging from 3 points here. We're diverging from this low to this low, and then both of these lows to here. So all divergence, all divergence. So I think what this is telling us is that the corn market is close, if not hasn't already, priced in the supply side of the situation. And then we are looking for higher prices. Now, how can we know whether or not we're really going to work this thing higher? Well, it takes a break up above this upper boundary. If this is in fact a wave 2, then you got to get all the way back up above here on this on the slope before this wave really gets going. And if that gets broken, then that would put obviously the 630 level in jeopardy. What would do that? Well, I want to show you the oil chart, and because I think that is really important. So I'm going to go. We're going to look at oil here, And our operating thesis at the moment is that you can't be bullish energies and bearish food. And that's because food is higher priority to the human race than energy. So if you have a single acre that's being torn between the two, do you feed a person or do you provide energy? You have to first feed the person. And to me, that makes all kinds of sense. So food, if energy is going higher, food's got to go higher too. So with this setup here, looking to go higher on energies, we think that certainly we're looking for higher food prices. You know, I guess I don't need to beat that to death any more than I already have. But let's look at wheat as well. Wheat, you know, it's been just absolutely pummeled from the high. We are holding on to this wave 2 count here barely. Let's see if we have any divergence action that's happening in the wheat market. So from a technical standpoint today, we have a really small bullish engulfing shadow. If we go down a time frame to the 240-minute time frame, you can see some repeat buy signals here on the DeMark sequential, and we can also see a divergence action happening here as well. So all three grains on all the shorter term time frames have divergent action, which is telling us that the selling is at least being abated for now, and we'll see if we get any type of bullish catalyst. Or maybe the most bullish thing of all would be a bearish report with a bullish reaction that would tell us that that is what that we have in fact priced in some of these higher yield estimates. You know, anything can happen. Nobody has a clue what the USDA is going to say, but right now that's what the best read of these charts is telling us, is that higher prices are more likely to come than lower prices at the moment. All right, that's 7 minutes. Remember, there is always risk in trading futures and options, and you should only do so in light of your own financial condition. We will be back with you tomorrow. We'll see if we get follow through or not on some of these reversals, and see if we get a little bit of short covering ahead of the report. And we'll be back with you with some ideas on marketing if we do get it. Have a great night. We'll talk to you tomorrow. See ya.